Litecoin and Bitcoin have been in a trading range together for a few weeks now. One of them is going down. Stick around and I'll show you what I'm talking about. Hi, this is Tim from TradingStrategyGuides.com. We got our trading education series started on Wednesday this week. I hope you all got to see it. Let me know in the comments what you think about it. Today's trade pick is a trading range on the cryptocurrency pair Litecoin Bitcoin, and we're going to look at that. But first, we've got a couple of other charts to check out. And later on, another brand new trading maxim. This one's kind of long, but it's really apropos to trading. Happy Friday. It's almost the weekend, guys. I guess that probably doesn't matter to most of us right now. Remember to click the subscribe button and hit that bell so you won't miss any of these great trade setups. Okay, let's look at our charts. This is the Canadian dollar Swiss franc daily chart. The first signal here is on a break of the 69.20 level, but it was on really small volume. So I didn't take that. Then I moved the resistance up here to 69.40, and we got a break of that level right here, also on small volume. Now it looks like this pattern is just totally blown right here, so I'm done with the CADCHF for right now. I showed you the NASDAQ bear flag on Monday, but it's changed a little bit, so I've redrawn it. This was our original flag in pink. And the blue right here is the new flag. And I like it better because it includes this low down here, which we didn't include the last time. And it includes all these new candles up here. So this one just fits better. In any case, I'm still looking for a candle close below the blue flag right here to sell. I told you Monday that I thought this Dash crypto pattern might be blown. Well, I'm sure of it now. It's just hanging out down here. So I'm done with this Dash setup for right now. Okay, let's take a look at the cryptocurrency pair Litecoin Bitcoin. Here's a daily chart of Litecoin expressed in terms of Bitcoin, or LTCBTC. We're looking at a really sloppy trading range here, but as I've said many times before, as much as we like to see it, beauty and symmetry is not important in the success of these patterns. A trading range is a consolidation with a strong support level, like this one at 58.25, and a strong resistance level like this one at 6,400. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the range, or above 6,400, or we're going to sell a daily candle close below the range, or below 58.25. On the breaking candle, we want to see this volume bar reach up to the volume average right here. If it doesn't quite reach the volume average, but does reach at least 75%, I will open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I recommend that you stand aside on this trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say that this thing breaks down here and closes right here, and that'll be our sell signal, so we'll enter a sell trade right there. On that day, you want to take a look at the ATR, multiply that by 1.5, and measure that distance above the entry in the case of the sell signal, or below the entry in the case of a buy signal. And then you want to measure 1 ATR for your first target. If after entering the trade we get a candle that closes back inside the range, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the range should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup today on the cryptocurrency pair Litecoin Bitcoin. Remember, my intent here is to tell you how I manage these trades. If you've got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure that you always do the right thing. Feel free to borrow from my list. And today we got another brand new maxim for you. Tim's Trading Maxim number 72. Some people feel affronted when something they thought to be true doesn't happen. If that's the case, then your sense of risk is much higher, and that leads to risk aversion. You need to be able to be comfortable in uncertainty. Now, this is a quote from General James Mattis. James Mattis is a retired U.S. Marine general and former U.S. Secretary of Defense. I don't usually use long quotes like this one for a trading maxim, but this is an important concept. In plain English, what General Mattis is saying is that we are offended by something that doesn't go as we expect it to, and it will cause us to avoid such situations in the future. In trading, we will often run into a scenario that won't play out the way we anticipate. We can't avoid them in the future. In fact, that's exactly the wrong response in trading. We are wired since childhood to avoid that which is painful. We are trained to learn from our mistakes. So when we touch a hot stove, the pain we experience teaches us not to touch a hot stove again. Unfortunately, that's a lesson we have to forget if we are to be profitable traders. Again, as the general says, we have to get comfortable in uncertainty. We have to execute our strategy consistently every time the rules are satisfied, even if we have lost the last 5 times we did it. Part of the way we learn this is in thorough backward and forward testing of our strategy. It gives us confidence that, even though we've lost several times in a row, we can continue to execute our strategy. Get comfortable in uncertainty. Remember our Litecoin Bitcoin trade plan here. We're going to buy a daily candle close above the range or above 6,400, or sell a daily candle close below the range or below 58.25. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And please don't forget to let me know what you think about the Trading Education series in the comments below. As always, thanks for watching, thanks for subscribing, don't forget to hit the thumbs up below, and have a great weekend, and I'll see you on Monday.